Welcome to the Bitcoin Business Podcast hosted by Sovereign. I am the representative of Sovereign, Brandon Karpeles, who will be hosting today. Today with me, we have a special guest, Eric Yakes from Epoch Ventures. And Eric is someone who's been in the space a long time, someone I personally followed for a long time, someone who was in the banking space. And I remember listening to you a while back, Eric, and having almost an identical vision of where we kind of thought the banking world was going to evolve. I would say around Bitcoin, but really Bitcoin is going to evolve the banking world around it. And we won't get into that too much here. That's not really the focus or the point of this podcast, but someone who's I've had kindred thoughts with for a while. So I really appreciate you coming on here, Eric. Maybe you just want to give us a little bit of background about some of that banking background, and maybe even before that, why you're at Epoch now, what you're doing, and how you're starting to see things unfold as businesses begin more and more to start putting Bitcoin on their balance sheets and integrating it into their day to day as well.
Yeah. I mean, my background wasn't really directly in banking. I think when people refer to banking, they refer more to commercial banking or uh, potentially investment banking, some of those functions. I worked in corporate restructuring, which had some investment banking functions, but really didn't deal much directly with the banking system at all. And then I worked for a private equity fund where we would just buy out distressed companies. Um, and so I had much more of just like a kind of technical finance background. I'm a CFA. And a lot of my understanding of the banking system has just come from research, either prior to or getting more involved in the Bitcoin world. And when I was writing my book, um, understanding the history of banking systems and some of the theory around how they could work versus how they work today. Um, I had a big background about that. So I think that the reason it was so interesting to me when I got involved in Bitcoin was that in order to understand where Bitcoin's going, we need to understand how it's going to scale, what that's going to look like, and that's what banking is. Banking was the scaling mechanism for commodity money, for gold and silver, and and we're witnessing in Bitcoin today that similar functions are emerging for scaling it as well. And there's new technologies that can also do that, and and we're trying to decide what those new technologies are going to be and what's going to need to happen in order for all this to work. So that's one of the most captivating things to me because really like the most important thing that addresses is what the potential market size of Bitcoin is going to become. How Bitcoin scales and what types of technologies are ultimately used by consumers to scale it is going to determine how much of the market is Bitcoin being used for money and payments versus just being used as like a digital gold. That's a small market to me. A lot of people think digital gold, that's a huge market. Bitcoin has a long way to go. And I think for people that truly understand where this industry could go, that's a really tiny market compared to if Bitcoin's used as a medium of exchange, if Bitcoin's used as a unit account to denominate capital markets. Um, these are much, much larger market sizes than just gold. And so that's what makes that question so interesting because the further uses of Bitcoin are determined by other systems it's integrating with. And that's either other protocols, that's with centralized scaling layers, like an exchange that's issuing paper Bitcoin, or like if there is a Bitcoin bank that emerges and is issuing notes effectively in a digital format for people to trade the Bitcoin more easily. Um, these are just different ways that you can either technically or economically scale Bitcoin in some sort of way. So, in a perfect world, we want some sort of perfectly trustless way to scale Bitcoin so that we can have certainty that whatever representation of Bitcoin we're using to transact with is going to be directly tied to the units of Bitcoin that are underlying it. And as long as that exists, then it's going to make Bitcoin for payments and as a unit of account not have any other sort of competition. But if we have some sort of uncertainty about that, then history tells us credit, aka fractional reserve, aka we're trading a note that isn't totally backed by Bitcoin, is going to have some significant role to play in the exchange of payment between Bitcoin as well. So it really is a question of how much of trade is going to be in Bitcoin versus credit directly in this, long-term vision of the world. Um, and to be clear, this is all something I view as like a 20, 30, 40 year from now type vision for Bitcoin. Um, but it's really paramount, and it's what a lot of the technologies today are ultimately being built towards. So that type of a vision. So it's really important for us with what we do. I guess bring this back from my background and my kind of research into some of banking was all this research in the industry made me realize like okay, so the most important thing happening in Bitcoin today is what's being built around it. And a lot of people describe this as building the layers of Bitcoin. Um, we describe it more as an ecosystem that's emerging. Um, Bitcoin's like the trunk of a tree, and there's all these other branches growing off of it, and those branches are trying to find sunlight in different directions, and the extent to which those branches grow determines how much more the trunk is going to grow. And like that's our analogy to basically describe what I was saying earlier. um, and some branches are going to die in that process, some branches are going to grow very strong and continue to grow. um, and I think it's the most important thing to be doing in Bitcoin right now is building the infrastructure around it that will allow it to become freedom money one day versus just digital gold. So I started my venture fund to effectively accomplish that. And we're looking at a lot of the technologies that we think are expanding Bitcoin adoption today and are, effectively finding sunlight that grows the trunk.
That's man, it's so interesting because when I was mentioning before about your thoughts on banking and everything, it's yeah, how do you keep a bank honest? I'm curious as to, and ultimately here we're going to get into the annual report and the corporate treasuries and Bitcoin um, being integrated into business as both a savings and some other companies as just a pure uh, corporate financial tool where people are basically using exactly what you're talking about, using the base of Bitcoin to basically get more credit money and accumulate more Bitcoin. And we'll talk about that more. And I'm very curious to get your thoughts on that. But um, back to sort of the banking layer, I'm curious to get your thoughts on eCash and just where you see that's going. That could end up in all sorts of terrible places, and it could end up in all sorts of amazing places. I'm just kind of curious as to your general thoughts about that.
Yeah. I've written pretty extensively on eCash, and I wrote this paper called Banks Without Bankers that was first listed on Axiom's website a few years ago. Um, that was my like deep dive into basically saying what are given the technologies that are scaling Bitcoin today, what could a future banking system on it look like and how would that work? And it's basically me focusing on Lightning and eCash, and I touch a little bit on the end on the ARC technology, which is just kind of emerging at the time. It's pretty cool that it's actually starting to come to fruition here, and we might see some implementation of it live soon. Um, so eCash is just a technology that is trusted to a degree. Um, it's no worse than any sort of centralized custodian. It's arguably much better than a centralized custodian. So it's an improvement upon that, and it has all the benefits that you're kind of afforded of centralization, as well as it's much more private. That's kind of the biggest thing. With a centralized custodian, they have internal data that says here's the person who owns the things. If they get hacked, people find out what you own. That's happened plenty of times in this industry. With an eCashment, it's actually being issued blindly to the people. So when you go to Coinbase and you deposit your Bitcoin and then you get effectively issued a receipt on your Bitcoin, which is just here's your Bitcoin balance in your account. On an eCashment, you get issued eCash, which is your redemption of the Bitcoin from the mint. And some applications are using that eCash to directly trade denominations of Bitcoin because people can be reasonably assured that they'll be able to redeem that eCash token for Bitcoin from a mint. Um, so eCash is just this kind of privacy preserving custodial technology. And depending on what you use, it can create a little bit less trust than a direct custodian because you can have the collateral of the Bitcoin held in the multi-sig. So that can be helpful. And it's kind of just this new frontier where it's basically like the reason that I find it interesting is because basically what we've witnessed, if we saw from the emergence of Bitcoin to all the other cryptocurrencies that have come about since, to the a vision of where like, oh, well, Bitcoin decentralized money. So let's take these other financial functions and let's decentralize them. And here's a cryptocurrency, a new one that does that in some sort of way. And and that was kind of this big view for a while. It was like a direct narrative, decentralize everything. We're going to decentralize finance. It still persists today. The reality is that reality set in, and everybody's like, okay, well, decentralization has very significant economic trade-offs for users. And there's really only very specific situations where we want to be decentralized. It's like, I don't want to drive a tank to work every day. I want to drive a tank to war. And I want to drive a sports car because then I'm going to get there fast and it's going to be way more fun. And that's kind of what we witness is that there's different trade-offs that you accept for different environments. I would never want to drive my sports car into war. And that's kind of the trade-off that a lot of people realize is decentralizing everything is like driving a tank everywhere. And we don't really want to do that. What we want is to have that tank when we're at war, and that's what Bitcoin is the fundamental monetary base layer, the type of technology that throughout history has been, most often co-opted by governments. It's always at war. We want to protect it from government control. We want to protect it from any sort of, centralized party control, whether that's government, whether it's private banking system, whatever it is. That's the innovation of Bitcoin is that we kind of decentralize that, and we always want to have that tank. But sometimes we hop out of the tank. We say, okay, we're at base camp. We're going to hop on a scooter and we're going to go around for a little bit on the scooter. And there's a bunch of different technologies that are going to allow us to do that. And like eCash is one of the things where it's really optimized for convenience, user experience. You're taking more trust. You shouldn't put all of your life savings into an e-cashment. And I think we're going to have technologies that automate a lot of those decisions for consumers, where it's like, okay, so if Bitcoin is my long-term savings, I can have like L1 Bitcoin as money under my mattress. The world goes to shit. I'm going to depend on that. And I can use Lightning for a lot of my other like larger scale financial transactions. Um, and then maybe for like spending cash in my wallet that I carry around every day in the same way that you take risk of I might lose my wallet, somebody might pickpocket me. There's a lot more risk. You wouldn't do that with your entire life savings everywhere you go. But eCash is something that can probably be used for a lot of those purposes. So like in the digital economy, that's kind of how I view eCash being interesting is that we're going to have different protocols designed for different purposes. And eCash can be something that is the most convenient used for a lot of lower denomination, smaller value type of holdings and transactions. And it can plug directly into apps in a really simple way. And there could be a world where like the new Apple Pay is just eCash on your phone that you're carrying around and things like that.
That honestly, that's where I see things going. I think that's where it's going to end up. You're just going to have eCash tap on your phone. I know Calais or Callie, legendary programmer, has been working on that kind of stuff. And you mentioned you were in the restructuring space, as was I. I handled distressed assets for a financial institution for almost 2 decades. And so I was in the belly of the beast of the fractional reserve system that we're currently operating under, and the need for a central bank to be there as a backstop to bail out these institutions. I lived through the bailouts 08, 09. That's really where I cut my teeth on understanding our monetary system and just how ridiculous it is. That being said, what I find fascinating about eCash is you're going to basically you could potentially have an automated run on the bank, so you can always keep these mints in check. So there's great potential for, even if it's just you're walking around money, like you're exactly right. Like, okay, I'm not going to put 10 grand in my wallet, but I'll put, $200 in there. At the same time, it's like, I'll put $200 in there, but I have a chain wallet. So, it's kind of like an extra added layer of security where, you're your ability to get rugged will be open to market competition, where you know, people forget that it just a year and a half, actually, it's 2 years right now. Time is crazy. With the Silicon Valley Bank situation, I mean, you had a situation where if the government didn't come bail that institution out, there was going to be billions and billions and billions of dollars lost to institutions, to individuals. That money was just not going to be available because there was a run on the bank. And people stood to be in a very precarious financial position, even paying vendors, utilities, these sorts of things, all because they were captive to this fractional reserve system that requires them to, that requires the banks to fractionally lend out against the deposits. And I just see so much promise with the ability for eCash mints. Technically, you can fractionally reserve, but there's going to be a mechanism in place where if you do that, you will get punished and you will be out of business, and there is no central bank to backstop you either. So,
Totally. Yeah, I think that was definitely one of the core components I was writing about in that paper, and it's really interesting what that could mean because it's a question of like there's a lot of developers in the industry that are trying to find perfect solutions to the trust problem and working with technologies around that. And the analogy that I used in my paper is that it's similar to when uh, Alexander cut the Gordian knot, where there's all these, men sitting around this really complex knot, which is representative of like this, intractable problem for people to solve. And Alexander comes up and he looks at the rope and he just cuts the rope next to the knot. He said, fixed it. And it's like, here's just a very simple way to work around a really complex problem to ultimately get to the same solution. And and I think that some of these technologies around things like eCash and centralized technologies, they're just a different way of solving it. And things like automated bank runs and coming up with something that may not be a perfect solution. Like an automated bank run doesn't guarantee that if there's a cheating fractional reserve mint, it will be instantaneously caught. But it does make it probabilistically certain that they will eventually get caught. And that's the big difference because what does that do? It changes the incentives. And then the only way, if that's the case, that anybody would pursue a long-term fractional reserve business model, assuming eCash mints are the prevailing technology for banking, um, is if the market would allow them to, because they know it's eventually going to be the case that people are going to know. And so that's a great thing. That provides an incentive. It's like a deterrence mechanism. It provides an incentive that would make them not want to do it in the first place, unless the market, of course, allows it, which we don't really necessarily know if that'll be the case in the future. I think a lot of Bitcoiners think it wouldn't be. I think they'd be surprised at how little people care about watching things. But then there's a question of if these can be simplified features for people because money is just going to be so easy to automate. And you just say, do it'd be like in your application, do you want to store in um, riskier or less risky mints? And people put, I want to be in less risky. And then they're just going to push it into Bitcoin into eCash mints that aren't running any sort of verifiable fractional reserve. So,
yeah,
yeah,
and then you wonder too, at least. I mean, you might even have a situation where the mints get to be open about it. Hey, we are running a fractional reserve mint. We're lending it out. It's risky, but you're going to get 8% or
totally,
4%.
totally.
Or whatever it is, but at least we're honest about what's going on here, as opposed to your money's safe with us, here's your 50 basis points on an annual basis to keep your money safe with JP Morgan Chase. It's like, no, you guys are running massive fractional reserve schemes, and you're going to get bailed out by the government, and they're never going to let people go home without their money.
Yeah.
So yeah, to your point, just completely changes the incentives and the alignment. And so I know that's not what we came here to talk about, but it's just such a fascinating topic to me. I just think, basically we're taking this 1,000-year-old, 5,000-year-old model of banking, and it's like, and I agree with you. I think in 20 to 30 years, it's going to be completely overhauled to this new system. Something, if it's not exactly eCash, something very similar and akin to it.
Well, yeah,
Uh,
I think what we're witnessing is the shift of people getting familiar with the idea of accepting effectively cryptographic signatures as a form of payment. That's what's happening with stablecoins. I think we're 5 years out from a very significant mass adoption of payments being accepted in like Tether around the world, and that makes me. Uh, I was a bit on the fence about stablecoins, but the more and more I think about them, the more I'm realizing that yeah, this is the only way that people are going to move onto these rails for payments in the near term, and that just means they're accepting cryptographic signatures as payment effectively, and then Tether's backing it with dollar denominated debt. And it's much better to be on those rails than to be on banking rails. Banking rails are way worse than stable coins. People talk about how it's some like new thing. It's like, oh, it's moving to this technology. It's just like it's not moving into it. It's the most dominant form of payment in the world. It's the US dollar. It just is it is it. And people are going to be using that for payment. It's much better they do that than have their bank deposits that are being tracked by the IRS can be censored or wage garnishment or you name it. This is 10 times better than the banking system itself. That's the
Well, and it gets moved instantly, right? I mean,
It gets moved instantly, and that's why people are going to shift to it because this is making the case that the rails upon which Bitcoin moves are superior. Then it's just like, what's the asset backing the rails? And then everybody's
yeah,
going to realize, Bitcoin's a much better asset to back the rails,
yeah,
and it's going to
yeah.
convert it from a savings technology into a payment technology over decades. And so and then we're going to have cool things like, oh, well, what if we do this privately and not on a blockchain? We can do e-cash, and that's going to give us privacy that we want, like actual cash spending where not everybody can see it. Um, and yeah, so I think stable coins are really going to be a catalyst towards that adoption in the near term. That
I do too. I would never use them. I don't like them. As the saying goes,
Mm.
Sats are my stable coin. But unfortunately, for a large percentage of the population, listen, they're going to be using dollars anyways. If they're not adopting Bitcoin, or pesos, or do they even have the lira anymore? Euros,
Hmm.
whatever the currency is, they're going to be using that anyways until they adopt Bitcoin. So I guess if there's a better version of these terrible currencies if there's a better, I mean, fiat replaced gold simply because it moved faster. And now we have an even faster version of that. So in theory, why wouldn't people take the ease of use and the speed? If you're going to be stuck using this bad currency, might as well have the better functionality. So I agree. It's just going to be a stepping stone. It's going to be a transition. It doesn't threaten Bitcoin in any way. And it's ultimately just going to be the intermediary before people fully convert to a Bitcoin standard. And it is what it is. And fighting it, or becoming a tether truther or whatever, it all seems kind of a waste of time to me. But anyways, let's. So you guys put out an incredible annual report. Everyone should go read it. It's free on the Epoch website. And there's just tons of information in here, and all of it's good. For the purposes of this podcast, I really wanted to focus on the Treasury. The exact title here is Bitcoin Corporate Finance, and you go into the Treasury portions of this, the ownership, who owns what, public companies, and there is a significant allocation amongst the public companies, among one company, of course, Strategy. Then at the end of the last year, it was MicroStrategy. It's 6 months into this year, or 5.5 months into this year. Have you seen a notable shift in that distribution? You have about 97% of Bitcoin is owned outside of corporations. Have you seen that number tick up significantly so far this year?
Yeah, that's a good question. I don't know what the precise numbers are. We haven't updated them yet. We probably will be looking at that in a few months as we move into right in year two of the annual report. But well, we know that it is significant. We know that MicroStrategy has doubled their capital plan from when we wrote that originally. Um, and we know that broadly speaking, we've seen the emergence of 21 and other similar scalable or of similar scale type enterprises that are emerging with Bitcoin balance sheets. So, which is what we called for in the report, right? the primary takeaway from our corporate finance section was to just kind of address a lot of top of mind questions and then set expectations for where we thought it was going. Number one being, is Sailor going to go bankrupt? We did the math. We read the credit agreements. Sailor's not going to go bankrupt. The situation that requires that is pretty absurd. That being said, he has changed his capital plan since then. So what we wrote about in that report could be a bit distinct, and with him more than doubling it, the solvency position could be, I think if he were to 4x his leverage, then it would be a scarier situation for him. um, but nonetheless, we made the call that there's going to be a bunch of Bitcoin businesses that all start copycatting this in a significant way. We made the point that this is going to be the number one driver of credit expansion within the cycle that's going to, cause a boom and bust potentially. Every cycle has some sort of credit expansion effectively that causes some boom and bust within Bitcoin, and we think that this is probably going to be it. We're kind of witnessing that happen right now. I don't think it's over, but I think, I caution everybody to be skeptical. There's going to be a bunch of CFOs taking on a ton of risk because they haven't found a better way to push up their stock price than doing this in a very long time. And they're going to look like geniuses the first month, and then they're going to start doubling down. And then they're going to take on a ton of risk, and all of a sudden there's going to come along a new public company that launches a Bitcoin balance sheet, takes out a big loan to do it, and it's really not going to pop their stock price that much. And then that's going to be kind of the canary in the coal mine for the rest of the market, that okay, the strategy's lost its punch, the market's getting saturated for it. And that's when stock prices might start declining, and then that's when some of the credit agreements are going to be getting called, and then that's when we'll have some sort of
Feels like we've seen this movie before, huh? Just on a maybe a smaller scale. I was at the Bitcoin for Corporations
mm,
conference, and that was my main takeaway. I was sitting there going, okay, MicroStrategy or strategy has this figured out. They understand the leverage profile where they need to be. And then one of the other companies that got up there, they were bragging about the fact that they were 64% levered.
mm,
And they're basically saying, hey, we're going to juice the returns even more by taking on even more leverage. And
exactly,
it's
that's
like,
how they differentiate.
exactly. And I'm like, that's their selling point. And then how many more of these companies are going to say, well, this company's at 64%, we're at 68%, and we're at 72%. And then you get one of these 40% drawdowns like we saw, and then it's just a massive cascade all the way down. And it's going to be only the companies that kept the conservative leverage profile. And I'm curious too. I wonder if the market has learned. Every time I feel like I'm gaining faith in humanity, it gets rugged out from underneath me. But I do wonder if the market has realize that, okay, the value proposition is in the companies using appropriate leverage, and the ones that get too far out over their skis are actually ones we're going to want to stay away from with our equity and our potential buying bonds and sort of these security issuances from these companies. I'm curious to see if that happens, but
I
I don't
think
know.
what prevents that from happening is that the risk of the leverage, this will depend on how the debt's being structured, but if it's, assuming it's relatively homogeneous in terms of structure across like this convertible structure, then the solvency issues coming in the future are basically predicated upon the market's expectations for Bitcoin price appreciation. And so, as long as that's the case, there's going to be a ton of uncertainty around that, which means the market's probably going to be pricing still in a Bitcoin yield focus until there's some sort of significant shift in the expectations of Bitcoin's price appreciation turning more downward. And then the second that happens is when all the highly levered guys look a lot less shiny. And yeah, to your point, we've seen this story before, and it's only going to happen again.
And that's when you start selling your chairs and everything else you own, and just start buying at the
Mhm.
when those companies start getting liquidated. But anyways, for more for what we're talking about at Sovereign, what we're trying to do, help businesses adopt Bitcoin, bring it in. You wrote a great section on here. It was just one quick page in here, and it was 4 points on the fundamentals of a Bitcoin Treasury allocation and what that does for a business. And that's really what we're working on, educating the companies, the nonprofits, the high net worth individuals, the family offices, churches, HOAs that we're working with is here are the benefits of adopting this asset and this money as your form of money into your company. And so I kind of just wanted to talk to you about each one of these four categories. And if you have some examples from what you're doing at Epoch or even just being around in the ecosystem, things you've seen of a real life example of how these have happened. So the first one is inflation protection. I mean, I think it's pretty obvious there's a ton of money sloshing around, and I'm sure we could point to anyone like a like a strategy, excuse me, or even a Meta Planet or what companies that have acquired this asset, they've outpaced inflation. Great. I'm looking more for if you have seen anything where it's a business who's really not accrued a ton of value to the business by just holding Bitcoin, but has really put themselves in a position where they were getting eroded by inflation. It was a problem, and it's like now we have a money that's protecting us from this.
Yeah, it's I think the best example in terms of like for a lot of our investments, it really hasn't happened long enough, I think, to quite make that case. But I think the best examples were during the pandemic, and like the Heenies is the best example of that. The Heenies was just like all this money printing's coming, and we're going to protect ourselves, and we're going to put a significant amount of our balance sheet into it. And what that did for Tahini's is got them over 1 million subscribers on YouTube, um, and converted their franchise locations from 4 to 50 within a matter of 2 years. Absolutely changed their business completely overnight, which we talk about as a separate point related from inflation.
Yes.
But nonetheless, what happened? They put their money into Bitcoin when there was a ton of liquidity getting pumped into the system, which leads to all the inflation about a year later. Um, there's one thing that we've seen that drives Bitcoin's price up, it's liquidity. And uh, pushing liquidity into the system eventually leads to some sort of monetary inflation.
Yeah, and I'm not going to prognosticate. I mean, there's plenty of professional tea leaf readers. I'm not one of them. But we all know that eventually the system has to create more dollars because there's too much debt, not enough dollars. If you can never repay all the debt in the system, so you constantly have to add new liquidity, and they're going to be doing that forever. And it's been a while, really since COVID, since we've had a true flood of new dollars into the system, and we're getting to a point. There's all sorts of cracks and sprinkles in the system, and they're doing some bailouts of banks, and they're doing some stealth QE and all this other stuff to kind of just keep it afloat. But eventually they are going to have to do another COVID style print, liquidity injection, whatever you want to call it. Or they can let there be a bunch of liquidations, and you and your old job and me and my old job would have been very, very busy in that case. But they used to let those things happen. They don't do that anymore. And at that point, if you're a business and you've chosen not to save in a better money, not only will you not be able to expand from 4 to 50 locations and have potential growth opportunities for your business, you're just most likely going to be completely behind, barely keeping your head above water, and you're going to be fighting the inflation problem you've been fighting forever. It just hasn't been so front of mind for you.
Yep, totally.
Um, and the second one is dilution protection. And man, this is something as I joined Sovereign to come work. We have a core group of contributors to the company. Our treasury is in Bitcoin. It has definitely extended our runway. We've avoided as long as possible going to market, trying to raise additional capital. We may do that. That's still a potential option on the table, but it has given us the opportunity for those of us who are putting our time and effort in exchange for equity in this business to protect ourselves, to not have to give up a portion of what we've earned and what we've put into this because we just simply are able to have a longer runway, and be able to pay for things out of pocket as opposed to having to go out to market. So I would love to hear some examples you've seen of this firsthand as well. Or I'm guessing more likely in your case, there's a seed round and we don't have to go out for round two. There's no Series B and Series C, and we don't have to keep going back to the well. You get this one and done, and then you're good to go.
Yeah, that's kind of how we look at a lot of it. Like when we first started proposing this idea and helping founders with thinking through this idea, um, we look at it's just like, look, you take on a little bit more risk and you are putting yourself in a position where you might be able to skip your next round, and that could be a really big deal that benefits all the investors in the business. As long as your cap table is a bunch of people who believe in Bitcoin, which in our world it typically is, and with our companies, it's typically people that are all aligned with that vision, um, then it's usually a risk worth taking, but you have to have proper, capital budgeting. And you have to consider what's my burn rate? How much runway do I raise a little bit more today? Take a little bit more dilution up front, put that into Bitcoin, still have 2 to 3 years of runway, and then if Bitcoin goes up a bunch, I just save myself a ton of dilution down the line. Um, so it's complex math. It's uncertain, um, but Bitcoin always tends to surprise to the upside, and it's worked out really well, I think, for people that do it.
Absolutely. I mean, we're going through that analysis right now. It's Sovereign, and it is nice knowing, hey, maybe we have to give up a little something, but to your point, we it's complex analysis, deep analysis, but when it's done, you're comfortable, like, okay, we're good for a while now. That we're in a position where we feel good about this. We've covered what we needed, and we put an allocation into a treasury that's going to be tapped in 4 years, 5 years from now. And to your point, we won't have to do that Series B. I mean, I remember when at my old job, we for some reason had a ventures group at a bank. I'm not going to get into why that existed or who thought that was a good idea, but anyways, we had that, and I, I I we would constantly look at these write-ups, and you would basically just see a whole new group of people coming in the Series B, and it was almost like a hostile takeover. It was like, okay, they burned through the first part, these guys are tapped, we're just going to come in and basically do what we want with this company now. And you can really eliminate that option. I'm sure you see that all the time in your world of basically you get the Series B, it's like, hey, we got a group of new owners now.
Yep. Yep. Yeah, we're a bit earlier stage in terms of where we're investing in the life cycle, but it's definitely true that once you get to a certain scale, new types of investors come in, and new types of management teams are necessary to scale beyond that, and things will shift pretty significantly.
Yeah, for sure. Okay, the third one is strategic financing capabilities. And this is on the surface, it sounds like kind of the stuff we were talking about earlier with a strategy or a meta plan and leveraging up your balance sheet and collateralized securities and 0% coupons and this sort of thing. But the companies we're focusing on, the companies I dealt with in my professional career, just any small business. I mean, especially a capex intensive business, any sort of manufacturing company or business that requires a lot of equipment to create whatever product or service they're offering, that this is an opportunity for you to put something on your balance sheet, knowing, okay, we have this piece of equipment. I know I'm going to have to replace that in 5 years. I mean, any good business owner, lender looking at a company, you get an equipment schedule and you know when everything's coming up, you know its useful life, you know the residuals. And this is in a outside of sort of a big corporate behemoth publicly listed company, this is an opportunity for businesses to plan for equipment purchases, capital, acquisition, deployment, allocation. You could potentially borrow against your Bitcoin. You could even just sell some Bitcoin instead of having to take on debt. And it opens up a whole new world of options for capital financing or capital allocation. And just curious, maybe some examples you've seen on that front.
Yeah, I mean uh yeah, it's interesting. I like honestly the simple aspect of it is really just this is something that is probably best positioned for public companies in terms of a point around it. Like that's kind of what we're identifying. If you are a particular individual or somebody who has, significant capital relationships and you can create unique structured products around it to assess, getting leverage into your business, that's great. Like what did Sailor do? There's this arbitrage happening where it's basically like Bitcoin's the best asset you could be owning right now. And there's a bunch of capital out there that is all constrained. It's all capital that must be allocated into the market because of legal agreements in a particular way. And that either needs to come through fixed income products or it needs to go in through some sort of industry vertical like real estate. And because there's a bunch of people that have given money to these guys and they've all agreed we are only going to invest it in these types of things. Um, so they have to do that. So it's like, okay, well, Bitcoin's like the best thing you can be investing in, but you're not allowed to. So how do I get allowed an allowance to be able to do it? Um, well, what if we create a product within that the confines of what these people are allowed to invest in, and then tie some of its appreciation or some of its interest or both to Bitcoin? And that's what we're witnessing. It's kind of like this arbitrage where like there's a bunch of capital that's constrained into different areas and people are finding ways to associate Bitcoin with it. And Saylor kind of started that by accessing capital markets and giving a lot of these fixed income guys exposure to Bitcoin, and to the volatility of the asset. And then he accessed a whole new pool of capital that's willing to give him very favorable terms because what the hell else are they going to do? They're going to go buy bonds. Like nobody wants to buy bonds. And so it's perfect. And like he kind of found that pool of capital, and the similar things happening in real estate right now where like a good example is like with what the Cardone brothers are doing. It's just like a REIT that they're putting Bitcoin into, and it's like, what do I tell any investors? Like, should I buy the Cardone brothers REIT? It's like, no, just like go buy Bitcoin. And if you want real estate, go buy some real estate too. If you don't need to buy a REIT with Bitcoin in it, but nonetheless, there's a bunch of capital that is earmarked towards going into real estate and invest in REITs. And guess what? Cardone Brothers REIT is probably going to outperform all the other REITs because it's got Bitcoin in it, and then it's going to be top quartile or number one, and then all the real estate investors are going to be like, okay, well, all the best performers were the guys who had Bitcoin exposure. We need to stick with these types of products. Same thing. It's an arbitrage, and that's just happening across every asset class because there's just not a better trade than Bitcoin.
It is just hilarious to me. It's one of the things that drives me absolutely bonkers is that under this fiat monetary system, you as an individual, oh, you need to invest your money. Oh, you need to go get it to work for you. Oh, you should have a personal investment advisor. Oh, we have a 401k manager of all your funds to make sure you get the best possible outcome so you can keep your money. Oh, you're a business? Yeah, you can't do any of that. Like what the logic to that is just
Totally. Yeah.
you've either acknowledged that individuals are forced to make investments that are too risky to be acceptable for businesses just to protect their savings, or you just have the most ridiculous law where companies are not allowed to save in the same manner as an individual or a household. It just
Yeah.
that one's bothered me even before I was a Bitcoiner. I've never understood that one. It drives me absolutely nuts. All right. On to I know you got a heart out here, so I want to be respectful of your time and want to get to this last one right here. The strategic marketing initiatives. So we have had multiple people on this podcast who have opened up all sorts of new avenues of business. To your point, you talked about the Heenies earlier. That is a
Mhm.
perfect example. We had Ben Justman from Peony Lane and Jason Rick from Rick Ranches and some other folks that will be coming on the podcast as well who have effectively created a business of making quality products that they were going to make anyways simply by just advertising that they accept Bitcoin. And I've been approached by some people in the nonprofit space as well to, hey, is this a good way for nonprofits to get donations, to advertise that we're accepting Bitcoin as part of our donation? And I always say, yes, that will work. That will happen. Also, let me tell you about the real problem it solves. And so it is a nice intro there, but just wanted to talk to you, pick your brain, maybe get a couple examples. I know we like I said, we did talk about the tahinis one, but if anything else comes to mind of where you've seen this be effective, where it's worked really well, and maybe some benefits that have come into different companies taking this strategy on here.
Yeah, I mean, we had a big one this year, Steak and Shake. We'll see what
Yeah,
happens. I'm really excited to see what happens to Steak and Shake, but I know that everybody out here, we have our own Bitcoin Citadel, the space. That's what our office is based out of. Everybody at the space in Denver went to Steak and Shake that day, um, and Steak and Shake is kind of like this failing fast food chain. So it could actually be really interesting to see how much this marketing initiative has benefited them. Hope they got a balance sheet. Hope they're doing a balance sheet as well with it. But they should definitely be leaning into it as much as they can. I think that's from companies I've talked to about this, and I'm always working on companies about this. If there's no way I can figure out how to do business with somebody, at least I'm like, you guys need to go on a Bitcoin standard and you need to accept Bitcoin and it's going to benefit your company in all these different ways. And if you don't do it, it's just a mistake. It's money you're leaving on the table. Um, but yeah, I've talked to a few that had been a bit on the fence about doing it. And I honestly told them, I'm like, look, if you're going to do this, you're going to get the highest ROI from leaning into it. The way that Tahini's did it. And, um, and if you go balls to the wall, like there's here's the key advantage. What makes this unique to anything else is that like Bitcoin is a revolutionary movement and there's millions of people around the world who all want to support it. And it's not altruism. Like it's not altruism. It's not like you have to depend on altruism for this to happen. It's what makes it unique is that it's money. So all of us have skin in the game. All of us are effectively like investors in this. And anything that supports your investment, you want to support. So if you tie a company, it's like if I have to choose between five different toilet paper companies and I really don't give a shit, but there's this one that's like, we're a toilet paper
pun
company and we fucking love Bitcoin. I'm going to buy the toilet paper company that fucking loves Bitcoin, as long as it's not like one single ply. But like outside of that, I'm buying the one with Bitcoin. And that's just how this works for every company now. And there's millions of people around the world where not only are they going to, that message is going to resonate with them, but they're also going to advocate for you on your behalf. They're like, check out the Bitcoin toilet paper company, and it's free marketing, and everybody's going to realize this, and it makes perfect sense to do it. And you just have all these people getting absurdly wealthy, and so many people, it seems too crazy for most people to actually take the jump. And then by the time they actually do it, they realize how stupid they were for never doing it in the first place. And then they go all the way down the rabbit hole, and it changes, their life and their business, and it changes the way that they view their opportunity cost of capital. And they're just like, oh well, look at how well my Bitcoin position did, and look at all this person that I hired to do my social media accounts, who I paid 120 grand a year. Um, Maybe I should have just put that into Bitcoin. And this EA that's kind of just being automated by an AI at some point. Maybe I should just put that into Bitcoin. There's all these people that they're going to be looking at, and there's all these endeavors of these new locations they're thinking about opening, and they're all just going to be assessing that against Bitcoin, and um, and that's just going to keep happening for a long time until Bitcoin matures.
First of all, there's no way an actual Bitcoiner is making single ply toilet paper,
That's a good
but
point.
that's but in all seriousness, back to what you're talking about with the cost of capital. I mean, I can't even recall the number of times where I'd be talking to a business owner and they would just get a piece of equipment. They're like, well, it's 100% financed, so who cares? Like,
Mhm.
oh, well, we'll figure out the cash flow later. You've just completely destroyed the actual cost benefit analysis of what you're doing because you're able to finance it, and the cost of money is, I mean, it's not zero. There is an interest rate, but it's effectively zero because you don't have to put anything up today. And it just completely shifts the way you view your capital allocation. And you're exactly right. Like I, you know, so many people talk about, oh, well, we have to grow, we have to grow. And my I'm beginning to come to the belief more and more, the more companies we get on a Bitcoin standard, the more they shrink, that they are going to get their footprint down. They're going to say the most valuable asset I hold is Bitcoin, and I'm going to have to return better than 30, 40, 50%, whatever the CAGR ends up being, to deploy my capital into something. And the reality is, you're probably better off, to your point, letting a couple people go you didn't need, recycling some old equipment, maybe not buying that piece of equipment, and just focusing on getting your margins up so you can get more into Bitcoin as opposed to just taking on more and more stuff to get bigger. And a lot of the times I interacted with these people, these business owners, they just wanted to get bigger to get bigger. They didn't really have a plan. They were just like, well, that's what you do. You just get bigger. And I think that's been a complete warping of the outlook on business as well. But
Totally, totally.
well, Eric, I know you got to run here, and I really appreciate your time today. I could talk to you for hours more about all this stuff. We got through 2 pages of your report. I would encourage everyone to go read it. It's at Epoch, EPOCH, VC.io. The full report's there. It's about 150 pages, jam-packed full of great information. I'm really looking forward to the 2025 one coming out. For a couple of things we talked about, how did Steak and Shake do? What is the new corporate treasury allocation? What percentage of that Bitcoin is now in companies' hands instead of individuals and nation states? And I'm going to be very curious. I feel like it's my intuition is that it's going to be a very different looking landscape at the end of 2025 than it was at the end of 2024.
Couldn't
So,
agree more.
yeah. Awesome. Well, Eric, why don't you let people know the best place to find you to the extent you want to give that out, and we'll wrap.
Yeah, find me on Twitter. It's just my name is my handle, and check out Denver.space. It's our Bitcoin Citadel. We're currently in spinning up a nonprofit for donations, and we promote economic education on Bitcoin. So check it out.
I know a bunch of the guys out at the space there, just a wonderful group of people out there. They're doing incredible work. And so, and man, it's so cool to see all these different uh, community Bitcoin communities and spaces just pop up all over the map. It's how could it go any other way? It's Bitcoiners grassroots movement. It's so cool. So yeah, check out the space in Denver as well. Another awesome venture. Eric, I thank you so much for your time today. As always, you can check out the official Sovereign account, SOVREIGN, on Twitter, on LinkedIn. I'm Brandon Karpeles, aka Plebe Anon on Noster. And until the next episode, we'll see you guys then. Thanks.